I think we're live. We're live. Thanks for coming out, everyone. Startup Grind is a global community for entrepreneurs. It's in was it 500 cities, Joe? Is that right? Yeah, so all over the world. So basically wherever entrepreneurs or entrepreneurial-minded folks want to congregate in different countries, they can do it. And we're lucky in Austin. We have kind of an embarrassment of riches when it comes to entrepreneurial people and people who have been there and done that. And so what we do is we've been doing this through the pandemic, sort of, but we're back. We're in Capital Factory. This is the first time we've gotten back in here. This year, we've done some events that were sort of semi-outdoor when Omicron rose its head. But yeah, so we're glad to be back in Capital Factory. And Joe's my co-director. He's over there. He's going to be the moderator tonight. But I've been doing this for about 5 years. And yeah, we like to educate, inspire, and connect entrepreneurs through the stories of those who have been there and done that. Whether that's through failure or success, we can always learn from those folks. So that's what we do every month. And we're glad to have everybody here. So thanks for coming. And if you're watching online, thanks for joining us. And I'll have Joe come on up and introduce our guests. Here you go.
Yeah. Appreciate it. All right, how's everyone doing? Thank you all for being here. My name is Joe Familette. I'm the co-director of Startup Grind Austin. And as Damon mentioned, we are a global community hosting monthly events in over 500 cities around the world. And every month we like to put together special guests to come share their story about building a company, the trials and tribulations, how to find product market fit, etc. And so tonight we are joined by the Rocket Dollar founding team, Henry Yoshida, Chris Palmisano, and Thomas Youngs. And if we can start by putting our hands together and giving a round of applause. Come on up, gentlemen. So I think we have 2 mics, so we can pass them around. And this is not only being live streamed, but we also will be publishing the video on YouTube after. So usually we like to start these by just getting some context for who you gentlemen are. So maybe we can work our way down the row here, and you can say who you are, a little bit about your background, and yeah.
Hi, I'm Chris Palmisano. I'm the COO here at Rocket Dollar, and
I don't know if it's on actually. There you go.
Can you hear me? Great.
Yep.
Hey, I'm Chris Palmisano. I'm the COO at Rocket Dollar. And my my background as it's relevant to Rocket Dollar was I was a user of these kinds of accounts from other providers and was familiar with just how complicated using your IRA or 401k to invest in alternatives was. And then I guess we'll get into the story later about how I know these other two, but I'll go ahead and pass the mic.
Yeah, thank you. My name is Thomas Young. I'm one of the founders, obviously, of Rocket Dollar and VP of Marketing. So I run all the marketing ops for Rocket Dollar, and yeah, the way I know these guys will come up in a little bit, but thank you for having us.
Of course.
So I'm Henry Yoshida, and I don't know, these guys didn't say much about their backgrounds, so maybe I should say it real quick. But
Yeah, you can start and we'll work our way back.
Okay, perfect, yeah. So I don't know, it's kind of rare nowadays, but I'm a native Texan, so I was born in Dallas, Texas. I came here to Austin in the 90s to go to UT undergrad, and I've been able to work through a career, but actually be based here the whole time. So that background in financial services is kind of what led me through a series of companies and corporate experiences and consulting experiences to really think that this was the right time to launch what we do today at Rocket Dollar, an alt-capable IRA platform. We'll get into more of that later, but it's actually a lot of that background and a lot of, being sort of maybe what would be considered an old school person here nowadays. I'm the person that could tell you what was in the spot of a lot of these new buildings before the buildings that are there.
Yeah, and my CV is shorter than these guys, but I landed in Austin in 2012 to go to the University of Texas, and really by chance fell into working in this space for another gentleman, and that's how I started learning about these accounts, and what led me to Rocket Dollar and to this team is seeing the frustrations that people were feeling in a very old way that we were selling accounts for $2,500. It was ridiculous. And now, what made me excited about starting Rocket Dollar was that there is a better way to do these things, and Henry is Mr. Retirement. It's crazy how much time and how much his career has gone through the space. And knowing Chris since I was in school was really good. So that's one of the reasons we landed together. But yeah, it's been a fun story. So I'm excited to tell part of it tonight.
I got to Austin about 10 years ago. On the back end of B school, I landed at Google, and at the time, Google only had about 35 or 40 people in Austin. And we used to kind of be worried that they would at some point just forget that we were here at all. This was before they had 3,000 people in a gigantic sailboat-looking building downtown overlooking the lake. And then during that time, eventually, like if you stay here long enough, you get interested in what's happening in the startup community. I don't think you can live here and not. I just so happened to have worked with another company that Thomas was working at, and that's how I met Thomas. The CEO asked me to mentor Thomas a little bit, and then Henry and I met doing a deal together. So we can probably tell you more about that later if you like.
Deal's still going, too.
That's good. That's good news. So, Henry, maybe you can give us some context around the genesis of Rocket Dollar. What inspired you to start it, and really, what was the founding story prior to deciding to start a company?
Yeah. So with Rocket Dollar, as Thomas kind of alluded to, my career has been in a pretty boring space. So when he says like I'm sort of Mr. Retirement, it's not as if I was actually ever retired. I spent a lot of time in Austin actually setting up retirement plans for companies. So I was here, I graduated UT kind of right place, right time from my career standpoint, but a pretty bad time then. So when I graduated, the internet bubble was bursting. This was a town, like at the time, Dell was the largest employer. IBM had over 10,000 employees. And all of IBM's buildings are actually now where you guys go to and call it the domain. So just, that was literally all of IBM's land and buildings. And they kept half of one or something like that and maybe chopped the back half off and sold the rest to become the domain. But that economic turmoil that really hit this city proportionally harder as a tech town caused a lot of people at these big companies, big law firms, big accounting firms, big accounting, architecture, whatever, to leave and start to throw up their own shingles. And I happened to work at Merrill Lynch. I could not get wealthy individuals to become clients like you would expect in a recession. But all of these people that had just left their big company jobs needed someone to help them set up a starter retirement plan so they could kick up, get 2 employees to leave IBM and join them a month after they left. So the rest was history for me. I'd set up hundreds of these plans, and that's kind of how Thomas refers to this Mr. Retirement type thing. And then I don't know anything else, and this leads into why the Rocket Dollar story. So my thesis became that I know what I know, which is this very super narrow field, right? I'm like 2 miles deep and about half an inch wide. But and the thesis became that, hey, I should look at some other macro trend that I didn't create that I can just see is going to be big. And in the time for Rocket Dollar was actually that people were starting to look at these private deals. That's how I made friends, really close friends, people like Chris. We met actually at a sort of a cocktail get-together because this founder in town, Rick Orr, wanted to get all the people that had taken a chance and bet on him as an angel investor, and he realized not everyone knew each other, so he just decided to open up a bar tab, and that's how we met at one of those events. And so that trend was people getting interested in private investments, and then obviously were digital currencies, and thinking that's a huge trend, that's gonna get big. And is there a way that I can overlap this 2 mile deep like expertise into that trend and then build a business kind of at some intersection of those two things? One I don't control, one that's bigger than probably all of us, and then the one little limited narrow thing that I actually know. So that's kind of what led to bringing the team together. And I'll let Chris talk about how we actually met Thomas through this. Again, it was trying to do a business deal, but maybe me talking to Chris, it was really that I just kind of found him to be, he didn't mention this, but B school, Google, coming here to Austin, but he's also a military vet as well. And he just struck me as this like guy that was like super organized and like just super focused and super smart and just very scientific. And the stuff he'll tell you guys later on will actually be more of like the mechanics of the things that we thought about at the beginning of the company that are really applicable to all startups and business building, because that's kind of what he does to keep us all together. My job is just to, usually wear something or hold something that's purple and try to represent Rocket Dollar. That's about it.
So, Chris, maybe you can talk about the beginning, right? What was that early discussion like? When did the company start? And what made you decide that this was going to be your next move?
Yeah, it's a fun story. So a lot of you probably know Brian Minnell, who runs the Austin Tech Happy Hour. It's been shut down for a couple years because of COVID, but I think we bumped into each other in 2017 at the holiday party. I hadn't seen Thomas in a while, and he was in San Antonio slinging similar products, but they were really expensive. There was no tech enablement for a company down there. I knew about these and said we should talk. We sat down to talk, and then I bumped into Henry, and I'm like, well, wait a minute. There's like, my head was like, there's something interesting happening here. He already knows how to sell these. Henry knows what these are, and they're looking for another project. I knew what they were, and so I got the two of them together. And it was only a couple days later where they were like, hey, we're starting a company that's called Rocket Dollar. And I was on the phone with Henry, like marching around in a bathrobe, and he's like, hey, rocketdollar.com is available. I'm like, buy it. He's like, I bought it. And so, by February, Rocket Dollar was a thing on paper anyway.
I was walking outside of my cul-de-sac, so I wasn't in front of my computer, so he told me to get off the phone, go back inside.
Yeah, and buy it.
Was it $11.99, or did you have to? Was it like a private auction?
No, it was a little pricier.
It was being offered for sale for $695.
Oh, that's pretty good.
So he bought it, yeah. And I was literally marching around the house in a white bathrobe, like talking on the phone with Henry. And then initially, and Henry had made what I thought was a very wise and mature decision. He said, I'm going to put someone else on the board, almost as an independent board member right away. And so that was me, and there was a role I was going to play. I was working at another startup at the time. But then a few months in, like there was kind of a draw to this. For one, I thought my skill set could be valuable, but at the same time, like this was something that we had kind of cooked up in a coffee shop. And there's something really, really appealing about that, right? And so for me, I thought, if I was going to do anything in finance, this is it. Because it's a niche product that I really understood. And I said, well, we can make this go mainstream. Everybody should have one of these. And honestly, like this is part of what drives us. Everybody, we believe 100 million people should have one of these accounts that would allow you to invest in anything very easily, just like you can buy a stock, a bond, or a mutual fund. And so that's kind of an exciting thing to go pursue. A little crazy, but that's kind of what you want if you're going to go start a business.
So Thomas, maybe you can, as the VP of Marketing, you can tell us what the traditional way that people are investing is, and then how is Rocket...
What the company does.
Yeah, and how is Rocket Dollar solving this problem with your product?
Right. Well, I mean, what the company does is we allow people to invest in alternative assets and keep the benefits of an IRA, simply. The traditional way that most people invest for retirement, right, is you go work for a company, they set up you participate in a 401k plan, you leave that company, you roll it over to a Fidelity IRA, and you buy stocks, bonds, and mutual funds. And you're limited, and the funds are the funds they let you invest in. It's what they tell you can do. But within the rules of the IRS, they actually only limit you to certain things that you cannot invest in. But the IRS actually allows you to invest in a ton of different things, including crypto, real estate, startups, private equity, basically anything that's not a collectible or something that you have a direct relationship to that you can't buy a house that your mom owns, for example. So what I learned in my past position was that there's a certain structure that allows you to do this. But it's paper heavy, it's complicated, it's not, people charge you a lot of money for it. And so it's something that's not easy to learn about. There wasn't a ton of content out there about it. And I knew that, we're in Austin, so this is a tech hub. I knew that there was a tech application to this problem. So that's what we do. We set up an IRA or a type of 401k that allows you to invest in alternative assets. And that's basically the big difference.
So,
long-winded, but.
Henry, you find these gentlemen, you've decided you're going to start the company, you buy the domain name. What are the next steps? Because in a financial services business, I'm guessing that there is compliance as one barrier to entry, or being able to legally provide these services. Yeah. And then obviously building a software business is expensive. So how do you get things off the ground?
Well, so we decided, now this is where I wanted this talk, and we talked about this before, Joe, that to be instructive for people, right? Just things that are applicable beyond Rocket Dollar, because that's the whole reason Startup Grind exists. That's the reason why, Damon does what he does for the community as a huge advocate of Austin and beyond. I mean, everyone knows who he is. But so one of the applicable things, the thing I liked about fintech businesses, and that's a term, it's very broad now, but I loved these types of fintech businesses because I kind of thought that the compliance and the regulation around when you're dealing with people's money is a little bit of a natural moat. So it made it harder for just anybody to get into the business. So that was one thing I liked. It presented this sort of natural moat. And then, you know, on the compliance side, the software, so here's the real reason, but we employed attorneys early just to kind of say, hey, what do we need to do from a trademark standpoint? They said, you know, you need to get someone that's not one of your 25 closest friends in the world to buy a product from you, and then you can sort of start to file to protect the name. So we threw up a website so someone can open an account, just go through the onboarding, even though it was all manual on the back end, just so we could start the process of protecting, you know, Rocket Dollar as a name and sort of getting to that. And then the name of the company itself, so thinking of it, the domain was one thing, but the other is it was just there. It was a way to signify that, hey, you could do things that you normally can't do with your money. You can go further and farther. Obviously, Rocket kind of signified that. And remember, this was 2018, so I mean, I didn't know at the time that the two richest people in the world were going to start competing to fly themselves into space, right? Because it wasn't enough that they were running Amazon and Tesla and SpaceX, that they all just needed to actually fly themselves and their friends to space. So Rocket kind of became, and space became this very cool thing, but it was really just to signify go further, farther with your money. And getting the software up, I mean, remember, simplicity is another key. We were able to pitch our business through whatever seed round, seed extension, and a Series A without using any buzzwords in any of the pitches. And I remember actually using that in these pitches, saying that, look, there's no random buzzwords like quantum, AI, machine learning, none of that. I mean, this is a technology-enabled workflow. The greatest startups that I know about can usually be explained in one sentence by a 10-year-old. Uber, you know, like, you can explain what they do in one sentence. Robinhood, easy. I mean, to maybe a different extent like we work, which, you know, who knows ultimately, but for
Extending the consciousness throughout the world, isn't that was their original thesis?
When they're a real estate company, very simple to understand, but the whole point was that that's how people got it. Like, you know, you took all the buzzwords and stuff away. What we built was a technology-enabled workflow to enable this formally complex and expensive capability to be made available to a broader group of the population. And then the bet would be that people either should have it or they're going to want to have it. And that bet was against that thesis that there's going to be a lot of people in the world that are going to want to buy alternative assets, real estate, invest in private funds, private companies that their friends started. And then in another way altogether that was separate from us again, digital currency.
So initially, you know, and correct me if I'm wrong, but none of you are programmers by trade, right? So what was building the MVP like? I know you had mentioned that, you know, you're putting up almost like a type form, right? That you can manually do stuff on the back end, but what was building the MVP like to get early traction, start protecting the name, and actually have a business running?
Yeah, so there's a couple of different things that happened. So we did have another co-founder who did have something of a technical background. And so he was heavily involved in getting sort of the first version of an app up and running. And we hired a developer, a young guy, 20 years old at the time, right? 19 when we hired him, basically straight out of high school. He's like I don't need college. I'm going to go write code for Rocket Dollar. And he did, and he's still with us. 16. Yeah, and Henry has that sort of track record of knowing people for a very long time, and then, you know, they come work together at some point. But he's still with us today. That developer or engineer is still with us today in a key engineering role for us. But you don't need all that to get started. So if you think about it, like, great businesses are very simple. They're just doing something really complex very simply. And so we could put up a brochureware website that was, call us for a solo 401k. We put a phone number up there, and the first phone number was, I think, mine. And then eventually we put this first sales guy, Dan, his phone number up there, and people called. And then at South by, we hired who would we hire? A guy dressed up in an astronaut suit to run around and hand out business cards and coupon codes. And yeah. And so we did this, you know, quasi-soft launch at South by. And so
This 2018?
2018.
Oh,
yeah.
wow, okay.
And so these things worked. I mean, people were calling in like we were opening accounts. And at the time, there was no software behind it. And so we had little yellow stickies that we put on the window. And like step 1, step 2, step 3, and then like, okay, get the paperwork, boom, get the name, and boom, boom, fill it out, and move the sticky like it was a workflow manager And then like literally the process of moving stickies on the window became the first set of requirements that the developer used to start building, the core application that on some level like still exists today. It's of course a lot more robust today. But you can get started that way. What we wanted to really validate was the hypothesis that, or our best guess, that if this was a lot easier, more people would do it. And that this is a very interesting customer base. And our first like 10 or 20 customers were, something like half of them had an advanced degree. So this is a very, very unique customer base. These folks are, even still today, they age between 35 and 55. They live in Tony zip codes. They have six-figure incomes, high six or seven-figure net worths. So this is a very interesting crowd and a very desirable customer. And we got started selling to them with literally just a brochureware webpage. And so then, the developers eventually built the first version of the application, and then over time, you just add to it. And you start listening to people about what they want and what they need, listen to the feedback. The feedback comes in over the phone, it comes in through customer service tickets, it comes in from virtually everywhere. Us having conversations with people here who might have an account. And so then over time, the app gets better and better. Today, the way other entrepreneurs could do that, there are volumes now of these low-code or no-code application development tools. You don't need to be a programmer anymore. Now, if you're going to go and build, if you want to build, the world's greatest app for something, at some point you got to go hire professional developers, sure. Or find a CTO and go that path. But you can get started, and you can certainly start testing concepts without any coding experience at all.
What was the inflection point when you knew that you had something? Obviously, there's Henry and Thomas, you both have experience in the space. So from your perspective, Henry, I think when you decided to start the company, you knew there was something there. But what was the tipping point at which all of you were working on it full time, the team started to grow, and potentially even, you raised some early funds to really go after this thing?
Yeah, I'll tell you my two, and then I want to hear theirs because I actually don't know what they're going to say. There were two. We pitched CTAN here locally, which is the Central Texas Angel Network. Still up and running, a great organization. And a little woman raised her hand to ask us a question during the Q&A, and she said, out of all the accounts that you have, and we had 80 at the time or 100 something maybe, I don't remember the exact number. So, how many of them do you two not know personally? And it was by then, we didn't know most of them. There was somebody had bought an account that day in North Dakota. I don't know anybody in North Dakota. I'm from New York and I live in Texas. And so no, there are people actually buying this that we don't know, and that's a really good sign. So that was one. And the second one was we have a customer who actually became an investor later on, but UPS pilot. And he opened an account with us early on, and he put, 50, 60 grand in to get started. And then a couple weeks later, calls my cell phone. Remember, at one point, my cell phone was on the website, and says, I want to roll over another 300 grand. And I was like, 300 grand? I almost dropped my phone. I'm like, that's a pile of money. We got something.
I love that.
So I was day one when Henry and I met on January 20th, 2018, something like that. Late January. I remember he canceled our first meeting because it was a snow day, so he had to stay home with his daughters. But then we met the next day, and that's basically the day.
Texans, I can't drive in the snow.
Right. Yeah, and so from that day on, I was basically on full. From January 20th when we met, we sold our first account in March. So it was a blur. And I knew that this was something that we could sell because I'd done it. But the first time that I was like, whoa, was when an account came in through the website. When we looked at the name, it was like, does anybody know who this is? Did anybody talk to them? And it was like, no, I don't know who that is. I don't know. I was like, somebody just bought a retirement account from us and they never talked to us? Whoa, if we can do that once on the internet, we can do that 10,000 times. There's a way to do it. So that was my big aha. But yeah, it was day one. We were full time, and it's been 4.5 years almost.
Yeah, we can talk and get into more of the details, but we did. So my last company was right out of the gate VC-backed seed round, based on an idea. We didn't have anything. So this one, a little bit different track. At that point, had more of a network, had a prior startup. And our initial round, we did a convertible note round, so it's pretty known here in town, and we did that for $1.5 million, and a lot of those were people that Chris and I did know through the community. So, and then us.
And we're also some customers as well at that point?
No, because we didn't have the product. Like, they maybe became customers, but we just introduced the concept, and it's kind of known here in town that you invest in someone's startup, they may invest in yours, kind of thing, and they don't. They're betting on the person, right? Because usually early stage, they always tell you you're betting on the person. You're not betting on the business. And most people didn't remember. We're in retirement accounts, and if my nickname to Thomas is Mr. Retirement, it's not very interesting, right? This is no buzzwords. This is not cool. This isn't flying cars or anything like that. But for me, I don't know if there's any one inflection point. I guess I was just really determined that I wanted to start something, and I really thought that, hey, we're a team that actually is the best equipped group of people in the world to deliver this product. Like, we're here so we can get the support of this community, right? Early investors were a lot of individuals. We knew the space, and I just thought that this is the right space. Like, in other words, we should build this product because the world deserves this product. So that was kind of what drove me. Like, I think that you guys may or may not know, but there's roughly about 17 to 20,000 registered mutual funds in the U.S., but there's only 4,000 publicly traded companies. So it may seem like it's a lot of choice, but it's a lot of choice within their guardrails at the top 10 financial services companies. So I really just thought that that's not the way things should be. People should have the freedom. It's their money. They get great tax treatment, long time horizon in these IRA accounts, and then there's a lot of capital need for private businesses, infrastructure, real estate, maybe cryptocurrencies, you name it. And we can tap into that. So let me tell you real quick the market, and then we can kind of keep going on. But the realization for me wasn't an inflection point after we started the business, was that there is $33 trillion sitting in retirement accounts in the U.S. 14 trillion of it sitting in IRAs, another 8 sitting in 401ks. The rest are, sort of corporate pensions. But let's just say that market, that is a massive amount of capital that could then be redistributed into angel investments, crowdfunding campaigns, LPs into emerging manager funds, cryptocurrencies, Capital Factory Fund, for example, that is literally sitting spread out in 20,000 different packaged products among 4,000 of the same companies. And I just thought that this will be a huge opportunity if we do this right.
It also seems like a business that's extremely sticky, right? So like when someone decides they want to work with Rocket Dollar, I'm guessing that the churn wouldn't be as high as other service businesses. Is that right?
Well, so that was by design too. So again, you learn, right? Things that are applicable. I mean, you want to look at, there's inputs that go into that sort of magical, everyone hears the term LTV, lifetime value customer. One of the inputs that people don't talk about as much is actually the tenure, or how long you keep that customer, and the amount that you could reduce churn. So people that don't cancel your services, right? This is a big thing in subscription businesses for streaming services. People sign up for the subscription on a free trial, binge watch their favorite show, and then never sign up to become a customer. Or they sign up long enough, the season ends, and then they cancel until the next season, for example. Well, the thought process for us was that we're letting people buy into private, alternative, completely illiquid investments using an account that you can't take any money out of until you're over 59 and a half. So those two factors combined actually created a really sticky customer, not because we did this sort of like jerk tech method of making it hard for them to cancel, but more that they proactively chose to get into a long-term vehicle in a long-term account type. And then we can build off of that. So that's, when Chris gets excited, like we get these accounts with 300,000, 500,000, we're thinking that, hey, this is 300,000 they chose to give to us. We're probably only going to get 5 to 10% of their investable monies in an IRA that they want to go into a private investment. This person could have 2.5 million more. They're a customer for 10 years. So now, and this is Chief Operating Officer's job, right? What are the other things that you're going to build, or the team can build to go sell them? Because we have 10 years with these people. We should be able to multiply the amount of money that we make off them over time if we do this right. We're still early, so we're talking to you in this early phase, but that's the thinking and mentality on our part.
Yeah, it is still really early. And, a lot of startups are notorious for pivoting until you find product market fit, both with the product offering and with the pricing. Can you touch on the initial product and pricing offering, and if that has changed at all along the way?
So a couple things. We started with just the one-person 401k plan. And remember, we had that brochureware page with a phone number on it. And people were calling it and also asking, well, hey, can you do an IRA too? This is where you have to listen. And so I think we had a sales guy named Dan with us at the time. You guys all know Dan Krasinowski.
We have his number. Remember, it was on the site.
Dan, still, he's probably still up there somewhere. Every time someone would ask for an IRA, Dan would make a tick mark on the window with a marker. And once there was a bunch of tick marks, we were like, that's the new product. And these guys all came in one morning and they're like, we're building an IRA. I'm like, awesome. And so we haven't steered very far from that. And remember, this market existed before we got into it. So we knew that there was a space for this. Again, we were testing whether or not a tech-enabled version of this would make it faster, make it better, make it easier, bring more people into the fold, let this thing eventually go mainstream, and then to Henry's point, can we sell them other things? And then on the pricing, so a couple of things. We fundamentally believe that there is a shift happening in finance, and then me personally, and in other sectors, where anything that can look and function like a subscription probably will. Or the pricing in finance and in banking and in general fintech will look more like consumer products than the typical fee sheet you used to get from a bank. You're a little younger than us or than me, but like first time I ever went in to open a bank account, they give you a folder this big with pricing. It looks like the menu at the Cheesecake Factory, right? It's like there's like 10,000 things on it, and the bank makes money on every little thing that you do or don't do. And so we thought, why not just make this and to Henry's credit and Thomas, they launched this before I'd even come full time and had it in a pitch deck ready to go with a subscription price. And so we've used that since, and that's part of how, to some extent, it maybe even not initially our intent, we ended up gating and having just this really awesome customer base, because if you have a really big account, it makes sense for you to come to us, because you'll pay a little bit less than if you were somewhere else. And really, really smart people think with their pocketbook. And so we have a really, really great customer base as a result of that. So on some level, that's working. It's been working since day one. And frankly, we haven't messed with it. We did add an additional service tier. Like I just saw an ad for American Express on that TV. And American Express was kind of an inspiration for us. So the second version of the product really was an enhanced level of service that we call Rocket Dollar Gold. And so we charge more for that. We charge twice as much in the subscription. And what was cool about that was we initially thought, 9 or 10% of people will buy the gold product. And that's what we had forecasted and modeled out. It's like a third, sometimes 40%, sometimes more of the sales. And so that means there might even be like, maybe a platinum or maybe a palladium option later on. But we're thinking about those things. But that's something that worked out really, really well for us.
And so the pricing has remained the same since day one? As in minus the additional tier, right. Like the entry level. And what is it? It's $360? And then $15 a month.
Or $630.
Okay, got it. And then is the subscription and the initiation fee how Rocket Dollar makes money? Or is there like a further value of if I have $100 million, me being a Rocket Dollar customer?
Yes, today that's how we make money. And then we have other agreements now with financial partners so that as the business grows, there can be some other revenue opportunities for us.
Got it.
But as of today, we're still primarily focused on that. And then we have, of course, a much lengthier plan that we're using the Series A funds for, which will get us into a couple of other things later on down the road where we can monetize with investments and other options.
Amazing. Thomas, let's talk about customer acquisition. So, right, early on, 2018, going out and getting your first 100 or a couple hundred customers was probably a different process in starting to scale the business. So can you talk about turning the levers on and how you started to scale the acquisition side of Rocket Dollar?
Yeah, I mean, at its core, it's been the same since day one. This is a cool thing that most people have never heard of, that they didn't know they could do. So whether it's in person, one-on-one for the first 100 or 200, or whether it's 100 at a time, it's always, and our focus has always been on education and providing content that makes it easy for people to learn what the possibilities are. So it's always been how can we create and provide educational content that people will interact with, and then decide that this is something that they want to do. And so all of our, typical digital marketing strategies, whether it's Google or Facebook or whatever, or one-on-one, has always been geared around education, and that's kind of the way that we've always sold. We've never really, employed any sort of hard sell tactics or any sort of, gotchas or whatever.
No door-to-door in gated neighborhoods?
No, nothing like that, because one, we wanted people to be happy with what they purchased. I mean, this is a big decision for a lot of people. And we wanted them to know what they were getting into and feel empowered and feel confident in what they were doing. And so it's really, whether, like I said, one-on-one or distributing content around the country, it's always been about education. And if you provide that, people will trust you, they'll respect you, and they'll want to buy from you.
And what is would you say, like the customer profile? Age-wise, I know we had talked about kind of income, net worth levels, but what is like the prime customer? And as your company grows, does that customer profile expand or change at all?
Well, yeah, so our customer today, like Chris alluded to earlier, is between 35 and 50, typically. They've had a couple years to accumulate some assets in a retirement account to the point where this makes sense for them. And really what they all want, what they all have in common, is that they all want access to other things. They want to control their money. It's that they've earned, that they've worked hard for, and they want to do other things with it. They don't want to be locked in to like one of these mutual funds or something like that. So that's kind of our core, and we call them Mikes internally. That's always been, we took a day early on to create this profile. We went through a questionnaire, and we built our sort of core customer. And the reality is, it makes it really easy because I work with him every day, but like Chris Palmisano is like our ideal customer. He's had a really good
picture on the window, is it?
I think it was. But yeah, it's someone that has had a successful career, has had time to accumulate assets in a retirement account. Because at the end of the day, the way it's priced right now, if you're 22 and you contribute, $5,000 or $6,000 to an IRA, it's really not priced in a way that makes sense for that person, and that's okay. So that's our customer today, and absolutely, I mean, there's an explosion of alternative investments that are not for accredited investors. That's always been a big thing in this space, and different asset classes, cryptocurrencies, that we're very excited about, and building product to sort of push the edges of our demographic age range, really, and build product for those people so that anybody that wants access to something else can get it. It's not just people that have had the time to accumulate assets to where this makes sense.
Got it.
Well, I have a thought on that too. So
yeah,
there's a strategy. So you asked like if that might change. So we are designing products, and we're going to come to make the product more broadly available to a bigger group of people. So that would be, let's say, younger, less affluent. And a lot of companies in fintech, they actually start the opposite direction, right? A lot of them are built on basically giving access to previously inaccessible investments, like professional portfolio management if you use Betterment or Wealthfront, individual stock trading if it's Robinhood. You used to not be able to do that with just $5, right? But you can do it at Robinhood. And so they start in Chime. Chime was banking services that were made available in a simple mobile app for maybe people that wouldn't get treated very well if they walked into the Chase branch in downtown Austin at 221 West 6th, right? So we actually thought that that's really crowded. That's hard for us to do that. We don't have the money to compete that way and just go after massive growth and unit economic losses from day one. So we talked about this, that we actually did kind of the Tesla model, which is you start super high end, right? Most people don't remember, but before Tesla became mainstream, they basically put their battery technology inside a Lotus, sports roadsters, right? And those cars were like $250,000 at starting, and then oddly enough, because Tesla is Tesla, now those cars are worth even more because they're collector's items. Then they start coming down. Now the Model 3 makes it available to a much larger, broader group. So we want to do that. We're starting in that upper right quadrant with a somewhat, let's say, affluent or very attractive consumer demographic, and then build the product set now make it capable and accessible from a much broader set of the public. And that's how we want to go. It's less crowded for us to go top down than from bottom up. Because bottom up is, hey, I need a $20 million, A round. That allows me to buy X amount in digital marketing. I should be able to get X number of customers. Now those customers won't pay me, and then I want to figure out some way to monetize them later. And I don't know, maybe I'm old, but I define a customer as someone who pays for something, and then I give them something in return. That's the definition of a customer. I think they're confusing the word user with customer. Customer is someone who pays. User is someone who has your product. There's a big difference in business, unless, we're in Austin, right? We're not Silicon Valley, so it's not easy to get a $20 million round on a pitch deck.
Yeah, no, that makes a lot of sense.
That's basically the whole point of building the business maybe here and in the style that we did versus maybe a style that is accepted or known in a different era in a different part of the country.
Yeah, I think the strategy makes a lot of sense, and it sounds exciting internally, knowing that not only is the customer expanding, but the product offering can expand along with them. Everything up until this point sounds amazing, but obviously building startups is extremely difficult, and there's hard times too. So I wanna pivot to talk a little bit about kind of two pieces. One is exit velocity, right? And going after a Series A round to increase the growth of the company. And two are some of the challenges that you faced along the way. And maybe those happened in parallel with each other. I don't know.
Yeah, well, it was tough. Obviously, there was a lot of changes in the world and the business. So we used to have a full-time office. So we subleased in a company that was an angel investor in at 800 Brazos was our first office. Our incorporation paperwork, has that as the address still. And then we ended up taking over as a sublease a space behind that parking garage. There's a 4-story building there, so that's where we moved to. And then right as that lease was coming to the end, that's when the pandemic started, and Chris sent everyone home. But there were a lot of times in there where just said, hey, just stop coming to the office and then we'll get all your crap back to you. So I remember he and I were actually up here putting everyone's stuff up and then, meeting up with them individually to give them their stuff back like a month after. This would have been in March of 2020. But, the raising money wasn't easy for us. I mean, this was kind of a little bit of an unknown concept, and we wanted to do it our way. I mean, I don't know. I think the way that we're coming across in this communication today is that these guys are really damn stubborn. Like, they didn't change their pricing. They didn't pivot their product. The story has stayed basically the same. But there were a lot of people that told us to do things differently, and that would have made it more attractive to them from a potential investment standpoint. But again, these are the opinions of the people who don't go to work in the trenches every day. They get to swoop in and give their expert opinion and then be out of there. It's one thing if they wrote the check and said that that's the condition, but we had, up and down times where, we weren't sure if we were going to be able to sustain it. I think my main thing I remember thinking, and I've heard Brett Hurt say this before, if you're the CEO, your job is to kind of maintain kind of the team culture and then make sure there's cash in the bank. It's then everyone else has their roles, but you as the CEO, those might be your primary things for a very big part of the early part of that company is make sure that you don't run out of money. Keep executing, keep iterating on those goals, but we were always dangerously close at different times, including the Series A. And when we ultimately got a chance to raise that round, we made the decision to kind of take a round that we thought fit us to get to the next points, what we had sold, what we could execute to, and didn't take any more or any less than that amount. We were offered more, and oddly enough, the only story that TechCrunch wanted to write was to write about why we took less than we were offered. They didn't want to write anything about the company. They just found out that we were one of 4 companies that this reporter for them was researching, and that's what she wanted to write about. So we didn't end up doing that story, but.
So you raised at the end of 21, is that right? So
Yeah.
Can you talk a little bit about the dynamics of the A?
Yeah, so again, this is probably a situation where it's better to be lucky than good. But we're in May, so May of 2021, you guys may or may not know, but May is designated as Asian American Pacific Islander Heritage Month. So we, like we always had done, had sent out our regular updates, and we were going down a certain path with a different group of investors. But that investor update that we sent out at that time, it was Labor Day or Memorial Day, ended up getting forwarded to a syndication group of Asian American founders and sort of investors. And they called me and asked if they could be a part of the round. And then what happened was when they wrote the memo to syndicate to collect $400,000 through this, very specific group to back an Asian American founded company, one of the people in that list actually asked to be put in contact with us directly and made a counteroffer to the round we had. Better offer, better terms, better leaving control in our hands in terms of how we continue the business to the next stage. So we took that. But this process went from May to ultimate close in late August of 2021. So that's what we're operating off of now. But again, the path that we were going down completely changed, just in that sort of 30, 60 days, and went down a different path, whole new group of investors. So that ended up leading to getting our lead investors, a group called Park West Asset Management, getting a strategic investor from a crypto exchange in Kraken, and then rounding that out with the new firm for VC legend Alan Patrikoff and his co-founder Abby Levy. So that's kind of how the round shaped up for us. And those are people that, we'd had a chance since to introduce them to each other, and that's what we're operating off of. So now they're in the trenches with us. And they're okay with us being somewhat stubborn like we're coming across right now.
And so how has the company changed or evolved since raising an A round, both, I guess, vision-wise as far as your goals as a company, and then maybe, culture and team-wise?
Yeah, so I'll just give the quick nuts and bolts and see if either of these guys want to chime in. But so the nuts and bolts are that we really wanted to fill out the engineering and product team. So I thought the advantage that we had over other startups, and this is other parts of the country, our advantage wasn't money, right? I mean, $8 million Series A round in fintech actually seemed kind of small in 2021. We had competitors and other people in the fintech space that were raising like 10, 50, $100 million A rounds in 2021. We didn't, but I thought the one advantage we had was we had longevity in the city, and we knew that we needed to now really refactor and make sure that the foundational tech was built to last and built to be, integratable if we were to eventually, right, there's only three ways to exit a company: bankruptcy, acquisition, or IPO. So two of those three are good. I'll let you guess which one is not the good one. And we just thought that, hey, we got to make sure that we're ready for that. So there were things that we did operationally to make sure we're ready, but then things we need to do team-wise. And the longevity in the city put us in a position where I was confident that we can go back and tap past networks and get people to basically join us. That's, to Chris's point, I mean, probably even today at 27 people, I would say that more than 14 of them I've known for longer than this company's existed now. Somewhere in that range. So it's a pretty high number and so forth, but pretty proud of that. And then we knew we could staff up when everyone else is saying, oh, it's impossible to hire people. They don't want to come into the office. They want to get paid $2 million a year so they could afford a house in Austin. I think that's about the ratio right now, right? So.
And are you still hiring? And if so, what type of roles?
Yeah, so we kind of did that. We wanted to front load. So we told our Series A investors that we would front load that in the first half of this year. So we're actually in a pretty good spot right now, especially with some recent hires, a couple of which are here with us today, because we wanted to make sure that they could get up to speed to be sort of relevant and contributing in the second half of the year, which is when we really need to execute as a business on the Series A dollars and leading into the process for a Series B round of the company, if that's the next stage for us, right? I mean, that's not the only way, but that's probably maybe the expected way. 70% of the expectation would be to go towards that path. But I would say that we're pretty, kind of filled out at this point, but purposely so. We did what would have taken us all of 2022. We tried to do it in the first, 100, 120 days of this year. Yeah. Otherwise, they're still going to be learning the job.
So obviously the last 60, 90 days or so have been a crazy time in the market. So can you talk about how the company, in a financial services company, is affected in a market downturn like we're currently seeing?
Sure. So a couple things. The first one is it's going to impact everybody differently, but in our business, you do have to deal with it, and so people behave differently, and so like there's a number of things that happen on the calendar. So there's the new year trickles over, then there's tax season, retirement accounts are generally used for tax planning purposes also. And so there's spikes in volume, and then maybe the volume slows down for a little bit. And then when there are big shocks to the system at the macro level, they are sometimes felt down at the micro level, so where we operate as a company. And so we'll see things like as crypto goes down, there's less accounts or less interest in crypto for a short period of time. These things usually always come back, and so there is some cyclicality to it. We don't have any concerns, but you just have to hold on tight and just stay focused on the long haul here, and continue to operate your business and keep delivering value, and things will work out, sort of in the end. So it can be entertaining to watch too. We diagnose the things that have happened in the previous day in our morning stand-ups or our morning calls. And there's a lot of interesting things happening right now. Elon buying Twitter. The run on Luna last night in the crypto sphere. And so these things are actually kind of fascinating to watch. But is it something that's going to hurt us in the long run? I don't think so.
Well, and I almost might want to add just that I don't know that you're necessarily focused on that, right? I mean, if anything, you look back in history, the greatest companies were usually, developed during tougher times economically, and maybe this is kind of a good thing. I mean, for us, we just tune that out. We have our cash, we have our runway, we have our approved budget amongst our team and with the board, so we know what the plan is. We know what the expected expenses are. We know what the expected forecasts are. These are the things that you do. You start to professionalize the company. So now we have a forecast model, right? Budget-based model, aggressive, downside case, and all those have different sort of expenses and different maybe capital needs. But for us, we're good from a capital standpoint, so we shouldn't really worry so much about what's happening in the markets. And I think that for us, if and when we're ready to go tap and run that process for the next round, I kind of view that maybe a pullback in this actually allocates more capital to the companies that were able to sustain themselves and be great. You look at some of the big startups of today, a lot of them actually did start in that sort of like 2007, 8, 9, 10 timeframe, and they're the household names that you know today. So that's the thing. I mean, Amazon is a success because it was a survivor through the internet bubble bursting in the early 2000s and so forth. So this is a good proving time, and we don't necessarily need to worry so much about the markets. Our clients are, for the most part, invested in liquid investments that don't have a daily mark to market, so they don't see it. It may actually be, if they needed to be marked, it might be lower, but they don't see that on a day-to-day basis. But it doesn't affect how we should run our day-to-day business. Like, I know exactly how much we're going to spend on every service that we use. There's a budget in place for a hiring plan and so forth, and all that has been set and locked. If anything, if I vary from that, I might actually get some flack from investors at this point.
Totally. No, that makes a lot of sense. I want to pivot to talk just about kind of perspective as a founder from each of you. And I guess, Henry, we could start with you. But what would you say are the things that the biggest lessons that you've learned in regards to perseverance, right? Like, we're talking about a tough market downturn, and clearly I think you guys have a really good perspective on it. But being a founder is difficult. It makes it a little bit easier when you have smart people around you. Can you talk about how you keep a level head, don't have too high of highs and too low of lows, and maybe also touch on the value of having these guys next to you?
Yeah, well, it's not just these guys, it's the entire team. So maybe there's a video I did of all the things media that we've done related to Rocket Dollar. The one that I like the most, it has nothing to do with the business itself, but Inc. magazine asked to record a video, and this is sort of what I live by. But I think it's actually riskier to be an employee of a startup than it is to be the founder, right? Because you said this earlier in the introduction. If the startup fails, that failure is usually ascribed to me, and people actually want to bet again on that failure. But those employees, the company failed, and they had this opportunity cost. They could have worked somewhere else, maybe bigger company, bigger salary, and so forth, advancement opportunities. It didn't happen because it didn't materialize in the company they chose to work for. So I don't know, I live with that every day, thinking that I don't really run this company for me personally to be successful. Like, I have a responsibility to everyone on the team. And that's why we have a pretty open, transparent culture in terms of communicating, the amount of cash, what we spend, how much we have, and helping them understand their equity positions in the company, and so forth. But, for me, I don't know if I let those high highs and low lows affect me so much because, I don't know, I came from the corporate world, so I didn't like that middle state where every day was the same, and it was more about corporate politics and, meeting management than it was about building stuff and, really going through some tough times and hitting inflection points and like aha moments, with a very close-knit team. I like that a lot more. I mean, I don't know, I'm almost terrified to go back to that same every day type of scenario.
Pretty optimistic by trait. Is that true? Would you say you're an optimistic person?
Yeah, well, you have to be because basically everyone is telling you that your idea may not work or people won't need this product. I mean, but that has happened to every entrepreneur. And I'll just end by saying that this is us. Like you may look at, let's say, my background and the team's background as like a very fundable, quote unquote, company. But I told Chris that up until the point we closed our Series A, I kept an archive folder. I had 408 rejection emails from investors. And sometimes like, 2 or 3 from the same investor at every stage of the company, and so forth. And so, I don't know, you just got to take a lot of shots on goal, I think, to find the right partners. Totally. But if you let that get you down, that's going to slow you down in that cadence. I mean, you just got to like understand that, well, I mean, clearly they just don't get it.
What's the trick with that though? I mean, I want you to elaborate a bit on it. I mean, do you go for long walks in the park? Like, what is the anecdote for 408 rejection emails and still having a positive mindset?
Well, I don't know. Just it's not anything that I do from a therapeutic standpoint. It's just letting it roll off your back and understand that hey, we are building something that matters. And there's a talk. I told you about it. The inventor of the iPhone, the inventor of the iPod, is coming to UT to talk in 48 hours. And the title of his book is Build Things Worth Making, his guide to building things worth making. And I think that this product is worth making. And if those 408 people, many of them are repeats, so I guess it's not actually 408 people, it's more their loss than mine, right? I believe this product deserves to exist. And I also believe that we're a very well-equipped team in a very well-equipped environment to make that happen and deliver it to the world.
Thomas, how about your role? I mean, how has your role evolved, and maybe what are some of the big things that you've learned along the way?
Yeah, I mean, from day one, I've been incredibly lucky to be surrounded by the team that we had at the very beginning and the team we have now. But specifically at the beginning, I had people that had done it before, had seen it, and could take care of all the things that I didn't even know existed and still don't know exist, a lot of them. And so they really gave me the space to just focus on one thing. And that was, first it was a product and then it was selling that product. And so my role has always been very narrow in that sense. So I've been very lucky to have people that have taken care of everything else. I've received 408 rejection emails. Like, I don't think I could handle that. That would be horrible. But in a way, like Henry, like shielded me from doing that so that I could focus on something else. Because if I had to do that and 408 rejection emails, my head would explode. And so I've been very fortunate in that sense. And yeah, like what Henry said, it's something that we think should exist and deserves to exist. And yeah, the highs are high and the lows are lows and lows are low. But at the end of the day, it's fun and it's, we beat each other up sort of in an intellectual way, brainstorming things. But the cool thing is you can talk for an hour and you come up with something really cool and then you go build it like that afternoon or whatever. And that's really fun. And it's the only environment I've ever worked in. I've been really lucky. But yeah, it's at the end of the day, it's the people that you're working with from day one to day, 4.5 years later, and 24 more people. That's really the part that I get the most sort of satisfaction from, if you will.
How about you, Chris?
Yeah, so I think it gets easier to accept 400 no's when you know you only need a couple yeses. It's like dating. I mean, like you really only need to win once, maybe twice. But you really only need to win one time, right? And so you don't need 400 yeses. And it only took like 7 or 8 to pull a whole round together. Frankly, it takes one that says, here's the term sheet, and then everybody that said no suddenly wants to take another look at you. And so that can come together really quickly. And so you don't have to be successful with all of them. And so the awareness of that can be really helpful. And then the other thing on a day-to-day basis, because there are a lot of ups and there are a lot of downs, and your original question was, how do you kind of stay within that range or that zone so the highs aren't too high and the lows aren't too low? And I think and I'm going to put my professorial hat on here, but I think the answer to that is you have to separate who you are from what you do. And they call this your identity versus the roles that you play. And I'm a COO, Thomas is the head of marketing, Henry is a founder and a CEO. Those are roles. They are not who these guys are on a day-to-day basis. They are people. They have their own self-worth, self-esteem, values. They are independent and integrated men, right? We all are. And then what we do at the job is a role. We're playing a role. And if you can separate the two, you can continue to build one so that you can take the negative feedback that comes in on a day-to-day basis about your role. And even if you're doing a great job, we're going to get some bad. We're going to have customers that aren't going to have a great experience sometimes. Markets are down. Investors are telling us to pound sand. And so you can handle that because you're strong in who you are on your core. And so I think if you can separate the two, the easy way to say this is you are not what you do. And make sure that there's a healthy line between the two. And it comes from identity role theory. That's how you do it.
How did you learn that initially before Rocket Dollar?
Very, very good sales training. I had a sales job, my first sales job. I was in a BD role prior to that, but I went into a no kidding quota carrying sales job at Google, and I paid for this sales training on my own. And then eventually my boss was like, hey, that stuff's really good. And then they started paying for it. And so I worked with a sales coach for a year. May he rest in peace. He used to live here in Austin, and he passed away during COVID. But a fabulous guy, and the material got really deep into the psychology of selling and sales. And it can be a brutal profession. This is why you meet people, all kinds of people in their late 20s, because they started out and they got a sales job and it didn't work. And they're like, I got to go back to school and I got to land somewhere and do something else. It happens all the time. I would spend days in the bowels of Google interviewing candidates, and I would hear the story over and over and over again. And then when you learn to do this, you can take that with you into other areas of your life. And you'd be surprised how often you're selling. There's really fascinating research from a guy named Daniel Pink. He wrote a number of really famous books, but one of them was about actually selling. Most of us knowledge workers spend somewhere between 60 and 80% of the day using the typical skills that a salesperson uses 100% of the time. So that's you negotiating, that's you trying to influence someone, that's you trying to carry on a conversation and communicate persuasively or effectively. So when you think about it, whether or not you know it, you're all in sales. And to some level, you're all in sales. Every founder is absolutely in sales. Ask him what it was like to go out and pitch all those firms. Like, that's a sale. And so anyways, that's where that came from. But I think that's what you got to do. You separate who you are from what you do, and that's going to allow you to get very, very good at what you do without having it take you down.
Something tells me that you put the professorial hat on quite often. Is that right?
I used to teach at St. Edward's.
It fits you well, I think.
Yeah.
So two topics that I want to go over before we open it up to Q&A here. One is Austin, Texas, right? We talked about how the dynamics of work have changed, since the pandemic. Maybe you can talk about Austin as a headquarter for a software and a financial services company, how it stacks up, pros and cons, and also how your work environment, being going from having an office to being more remote-based has benefited the company.
Yeah, I'll start. And so a couple things on Austin comparatively. Even Sequoia, who's probably the best venture capital firm on the planet, has come out and said that you can do this anywhere now. So for them to put, this is the Silicon Valley stalwart, for them to go ahead and say you can do this anywhere now is kind of the seal of approval for us all to go start companies wherever we want. And we're going to do it here in Austin because that's where we live and this is where we want to do this. But frankly, now you can do this anywhere. So there's no reason you can't do it in Austin. And then given what's given Austin's growth and who's here now, and the new people that are here, and the new money that's here, there are all kinds of venture capital firms and investors here that were not here 2 years ago or 3 years ago. And so the landscape here has changed considerably. I think it's all, in the long run, going to be a good thing. There will bring some additional tension. So housing prices for one, and it seems like it's getting rather difficult to get into certain restaurants, and it's just crowded. There's just a lot of people here now that weren't here before. But I think this is a great place for us comparatively. Could we be doing this in the Valley or in New York? Sure. But we're only a short flight from New York, and we're pretty well connected up there. So I think we'll be able to get what we need. And then on the office thing, that was March of 20 when we sent everybody home. And it's not better or worse, it's just different. And I think you get used to it. We are completely distributed. One of the things that we do that I like is every employee can go to a WeWork. So we work on demand, it's inexpensive. So if you got to get out of the house, or you got to have a team meeting, or you got employees coming into town, just go get a space for the day. So I think where we land at the macro level is companies figure out, when do I need my people in the same place and when do I not? And what is the rotation, and what activities are better in person, and then do those things and follow the best practices. And so maybe that's 2 days a week at home, and maybe that's Monday, Friday, so you can enter the week and exit the week in your home office, and maybe that helps people have a better home life. But Tuesday, Wednesday, Thursday, when you got to do your deepest thinking, or when you're doing really intense collaborative work, or you're really getting deep, doing deep work, maybe you do that when you're in the office or at the office, the shared office with your team members. So companies will have to figure that out. It'll be different for certain roles and certain functions and in certain industries. But over time, I think we'll get it right. You got to remember, the people that are in charge at big companies today, they're older than he and I. And so they grew up in business where everyone had to be in the butts and seats, and that's even the phrase they used, all the time. So this idea that everybody's going to work from home is like, this is why they're having this debate, what are they calling it? The Great Resignation, and people are leaving, younger folks are leaving in droves because they're like, I'm not going to work from the building every day. Some famous AI researcher just left Google or Apple, one of the two, because he was like, no, my team can do this remotely, and I don't want to come back to the office. And so companies will settle on what works best for them.
Yeah, so going back to the Austin thing, I mean, I landed in Austin to go to school, and I fell in love with the city. I loved going to UT. I thought it was a fantastic school, but I loved everything around UT. And so pretty early on, I made the decision that I was going to do my best to stay in town and do whatever, work for whoever would hire me, and I just wanted to be here. I thought that I'd been in Capital Factory a couple times when I was in college, and I thought it had like really, really fun energy and motivated people, and it was exciting, and I wanted to be a part of that. And so I made the decision to stay. And then I'm here now, and I have no plans to leave. And for me, my experience with COVID in March in 2020 was, I live alone. I lived by myself, and so for me, it was really easy. I had a quiet space to work every day, and I didn't have to deal with a lot of the things that a lot of people had to deal with, like kids and pets and spouses and all these things that a lot of people did have to deal with that was difficult. So I actually found myself being more productive because I'm the talker of the group, and so I would spend half my day in the office going around talking to everybody. And so all of a sudden, I found myself in an apartment with no one to talk to, and I became really productive. and so for me, working from home was really a net positive. But like Chris said, I really look forward to the days that we're all together, because it's not every day, and it's not just because you have to. It's because you want to, and because it's going to be productive, and because you're excited to see your team, because I still like seeing everybody. And so like Chris said, I think that landing on this sort of hybrid model will be different for everybody and every company. But for us, I am amazed at how well our team adapted. I mean, the email went out on, I think, a Sunday, and it was a week before everything really shut down. So there was like this week where everything was open, and you were like, oh, there's this pandemic thing, whatever, like, I'm gonna go hang out with my friends, and we're all gonna work together because, we get 2 weeks to not go to the office. This is amazing. I don't think anybody knew what it was gonna become. But our team
Maybe
responded.
Bill Gates. No, I'm just kidding.
Yeah, well, I think he knew. But no, our team responded incredibly well, and we were on Zoom calls the next day, and it was as seamless as it could have been. It really was, and Chris and Henry and everybody supported everybody that needed the support, whether it was monitors, whether it was chairs, whether it was a desk. Some people had never worked from home at Rocket Dollar, so they really supported the team. And made the transition really seamless, and I think we've landed in a really healthy spot.
Anything to add to this, Henry?
I'll just be quick. I mean, I just think that, in the time I've lived here, it's pretty nice to see that Austin used to be the town where these big companies actually put their, sort of less like primary business lines here, like the marketing arm for Apple or whatnot. Now, in the last 3 years, Oracle. No, we're moving our whole damn headquarters here or whatnot. I mean, big companies are making those decisions. So that's good. This is all positive. It's getting more talented people to move to this town. And I think it puts every entrepreneur position to really build an amazing team of talented people. So I think that's good, positive. So hopefully we keep going in that direction. We have growing pains like any other city, but if we can kind of keep, dancing this fine line of maybe doing it right and being attractive for outsiders to come in, that could be a big positive for us. But I'm really proud that we have the company based here. We don't have all of our employees in Austin, but I think 16 or 17 or so live in Austin. And we only get together, again, when needed in meetings, and we kind of call that. And everyone else has the freedom to work from home, and we trust them to do that and get their job done.
Well, I've only lived here a year, and I feel very welcomed in Austin, and I think the best is yet to come, right? I think it's a great city, and also there's great surrounding cities that are 20 minutes from downtown, right? So you live in a big city, oftentimes the traffic can be a barrier to go do the fun things. I think Austin's extremely accessible. Yeah. So last thing we'll wrap on is, first and foremost, being in Texas, everyone thinks of barbecue, but I have to ask, number one piece of advice for anyone working in a startup, and number two, your favorite breakfast taco in town.
Yeah, well, I mean, remember, you're talking to guys who are like in Austin, so my favorite is the Auto at Taco Deli.
Okay.
So I don't know if you've had that. Refried beans, sliced avocado, bacon, flour tortilla, not corn. I don't know who started like putting corn tortillas on breakfast tacos.
I don't
Wrong
know.
type of tortilla. That's for enchiladas.
Yeah, Taco Deli for sure, 100%.
You have to come up with your own. What's your?
Well, it's I don't know what it's called, but it's chives, ham, and eggs at Taco Deli. I don't know what it's called. But yeah, no, I'm incredibly proud to be in Austin, and we do have. I mean, San Antonio. I lived there for a long time, and our breakfast tacos are way better than San Antonio.
Oh,
so,
wow. Okay, good. That's good to know.
I go to Torchy's and I order one of the regular tacos for breakfast. It's called the Democrat, and it's not a
That is a
political
good one.
statement. It's not a political statement, but it's barbacoa beef wrapped up in the taco with some cheese and onions, and it's really, really good. Oh my God, and it's not even 200 calories. So that's really cool. And then advice, I would actually tell you to get to know as many of the people that work for these big companies as possible. So the Oracles, the Apples, the Teslas, the Metas, the Googles, the Facebook, well, I guess that's Meta now, right? Facebook, whatever. There's an enormous number of these companies here now. And I was one of those guys, so this is why I'm telling you this. Every one of those people there will want to leave that company at some point. And the first place that they will want to go is to a cool or a hip startup. And so you need to know them. They're good people, they're smart, well-educated, usually well-comped already, and they can afford to take a risk, a lot of them. Most of them are probably accredited investors, and I think it's an untapped source, and the more of them are here, the better off we're all going to be.
Any tips on how to meet them other than standing in front of the building?
Yeah, LinkedIn. They don't go to the building. LinkedIn, or my favorite is the snowball technique, like I meet you and you introduce me to that guy, and then he introduces me to that guy, and that guy introduces me to that guy, and before long, you've met 6 or 7 new people. We did this little analysis when I first got here, and back then, this was 2011, there was only about 500 people in Austin you had to know. And from those 500, you could get to literally everybody in town. And so the sales team broke up to like, hey, you're going to go meet 125 people, you're going to go meet 125 people, and before long, we could get a hold of anybody in town. That's changed now, but that's my advice, is get to know those folks, and at some point, they will all want to go work someplace cool. And hopefully that's for your startup.
That's great advice. Thomas?
Yeah, I would say listen, and then I wouldn't have forgotten the advice part of the question. No, I think it comes down to, one, surround yourself with really good people, and like Chris said, meet as many people as you can. There's tons of great resources, tons of great places around town to do that. And then the second one is show up every day and you do the work, and you sit down and you just do it, and the highs will be high and the lows will be low. But if you just plug away at it, things will happen and things will start moving, and you just got to keep showing up. And if you do that more oftentimes than not, I think you'll be successful. And so just show up.
Henry, any last final words for a Q&A?
Well, I think I think Thomas said this slightly, but just show up, maybe get out there, go do things. There's a lot of really cool free events that you can meet people at here in Austin. So you could either choose to be at home by yourself, or maybe you could choose to go out and you might meet someone. And at the end of the day, you could still go home at the end of the night and watch TV by yourself if you choose to. So that's probably what I'm going to do a little bit of, or maybe read is probably more my thing. But yeah, just, I met a lot of people in this town, developed a lot of relationships across a lot of industries. I had a corporate life, had a professional services life, and then maybe more recently a startup type of life. And you'd be surprised how much overlap there is in those groups and so forth. Pretty strong community here. You just got to get out and go meet them.
Yeah, no, I love that. Any questions?
Yeah, so I'd love if you each could share individually what's your favorite alternative asset class that you guys use within Rocket Dollars.
Great question, Dylan.
Yeah, so I like doing direct angel investments. Because again, I think it's more of a statement that you're betting on a person to do great things, and it's not really so much about trying to always make money, but it's about supporting someone and trying to build something worth making.
Yeah, to Chris's point earlier, the fact that you can now start a company anywhere. One of the things that I'm really excited about is I think crowdfunding is really cool for people that are not in, maybe hubs or near big VCs or big pools of money. The fact that you can raise money and probably get a bunch of customers all online, I think is really cool. And there's been, changes in the law that allows companies to raise more, to the point where it's actually now an attractive pool of money. You can raise up to $5 million from non-accredited investors via a platform. I think that has a lot of opportunity for a lot of companies and for a lot of investors. So I think we're only at the beginning of crowdfunding as an avenue for investments, but also for companies to get funded.
And I can't have my glasses on, so you look kind of young from afar. So, like, if you came up sort of in the social media age and you can tell a great story online, Thomas's point about being able to raise $5 million on crowdfunding, that's like a seed round on a campaign, and so like you can do this now. So I like crowdfunding. Me personally, I've used it. I've used my own Rocket Dollar accounts to invest in startups. To make follow-on investments into startups that are doing well. And then there's a platform in town called Microventures, where I was able to buy some later stage private shares for like basically not really a startup once they've gotten past Series B, if you will, but so some later stage private companies in hopes that they'll go public or do something, Stripe, I got a hold of a little bit in Stripe that way. And then I'm at the point now where I'm starting to think a lot more about how to do some real estate also. But I'm not going to, look, I'm in management. I don't do any real work. So I'm not going to actually buy rental properties or anything. So I'd be looking for syndications or real estate investment trusts that are private that you can buy into. We happen to know people. So if that's something that interests you, of course, we can put you in touch with the right folks. But I'm going to start doing that sort of next.
Any other questions?
Sure. So since you deal with a lot of money and this belongs to people and, they probably have saved it for a lot of years of their life, did you have to go through any kind of lack of trust issue in the beginning, since you're a new company out of the block? And how did you deal with those issues? How did you build trust? If you could speak to that, that would be great.
Sure. I'll give you a couple things that we did. What we put everybody's faces and bios on the website, and so you can click it and see who we are. And when they call, they go, "Oh, is that are you are you Chris? Is that who I'm talking to? That's me." And they can see who we are. So they're not sending money to some faceless, nameless people. We put right in the bottom of the page, this website was made with love in Austin, Texas, or something like that. We picked that up from another startup in town that I thought was kind of cute. It's a cool idea. And then we did put ourselves voluntarily through auditing, so we get audited. We did a crowdfunding campaign, which means we're a reporting company, so we actually have to file with the SEC. So we actually do these things almost like if we were a large company. And so these are helpful, and we can share those results. Well, for one, the SEC filings are public. You can go download them. There's a logo on our website that shows that we've been voluntarily SOC audited, which is like going in for a medical exam that lasts 5 weeks, and they look at everything. So these things help us build trust. Now, whether or not a customer browsing the website for the first time goes, "Oh, these guys have a SOC certification," probably not. What I think is helpful for them is that the site's well designed, phone number up top. Again, they can see the bios. They can, they see our faces for radio. And so I think those things are really helpful. There's testimonials up there. And then they can see that we have investors in the company. So I think over time, you start to look, to some extent, even a little bit bigger than you really are. It's like walking around with sort of your chest puffed out, but these guys might have something else.
Yeah, I mean, everything Chris just said is true. And we actually just finished running a nationwide study that looked at how people view retirement accounts, alternative investments, but also there was a portion of it that asked what would make people feel comfortable in this. And trust was the number one thing, working with a trusted account provider. At the beginning, it was really hard. I mean, people were asking, what happens if you guys go bankrupt? Where does my money go? All these, and we had both contingency plans for all these things and answers for all these things. And trust is built slowly, right? So some people have been newsletter subscribers for 3 years before they trusted us. And I think trust is built slowly. And I think at the end of the day, it's if you do what you say you're going to do, when people see that, you earn people's trust. And answering the phone, putting your face up, being accessible. But it's slow, and it's definitely something that we work at because it's people's money, it's people's life savings, it's their retirement accounts. So it's something we take seriously.
Yeah, that's basically the thing. I mean, we did audited financials, we got a SOC audit, and we basically show people that we're the people running the company, not hiding, and that was a big thing. And then all of a sudden, people started opening. Our average customers right at $100,000. So that's a much larger account than Chime and Acorns or Robinhood, companies like that. So, again, different demographic, but I think that doing the things to be organized, it's not just looking bigger than you are, but it's actually doing things that bigger companies than you do in your smaller organization. It's good muscle building.
And alternative investing is also very complicated, and a lot of people also don't do that because it's just so messy. There's just so much paperwork that a lot of people are not aware of. So, and you have, I think, 3 or 4 of those categories. How did you go about learning each of them, and did you productize all of that to make it easy for your customers?
Well, so remember, our thesis was built on that really we don't get paid to actually connect our investors to the investments. Usually they know the investments. They pay us to get access to the money they already have. And they kind of have a general, let's say, inclination for the investments they want to do. So like to Dylan's question earlier, people have a favorite alternative investment. What they realize, though, is that this is a really big store of long-term money that I have. Now this company is going to let me use it to go into my favorite alternative investment, crowdfunding, private angel investing, real estate, or whatnot. So in a way, people don't pay us to to recommend investments. Like, people pay us to actually get access to their own money.
Can I just ask one last question? What's the marketing channel that is working out the best for you guys? Of all the ones that you have tried, where are you acquiring the most customers?
I'll let Thomas just answer real quick. I think I know what the answer is.
Yeah, so one of the channels that works really well for us is our affiliate channel, working with anybody from content creators that write about alternative investments, that maybe review different financial accounts, things like that. That's a really great channel for us, and actually one of our best channels is referrals, and that's a testament to our support team. That's a testament to our product team, that people buy this account, think it's cool, invest in something they like, and they talk about it, and it accounts for quite a bit of our business is referrals, and that's one I'm actually really proud of, because we can talk about it all the time over here, but a referral means that somebody really had a good experience with you and trusted you, and you provided. So that's the biggest one that I like, but affiliates are fantastic, and we have great affiliates. We've been lucky.
I have a question here real quick.
I think he actually, did you have a question?
Oh, yeah. Here, can I give you the mic so everyone can hear? And then I'll take my question after you.
Oh, this is about the marketing. Did you partner up with any of these e-banking, cloud banking providers like Pfizer, FIS, Q2, where like you get a Rocket Dollar into their marketplace, and you can, like if an FI is interested in integrating with Rocket Dollar, you can instantly get access to like all the customers of the FI?
So we just signed a deal with one of those, so that's going to launch later this year. So we haven't done that up until now. So remember, that's the other thing too. You kind of have to build your startup to a certain point before anyone wants to partner with you. So you end up tending to get into relationships early on bad economic terms, because remember, you had nothing when you approached that potential partner. Now you became a little bit bigger, so you go back to them and you say, hey, look, either we're going to redo this deal or I'm going to go find a new partner. But again, channels like that open up where maybe they open up exposure to a 7-figure, 8-figure number of potential back-end customers on an affiliate channel. I think a lot of startups, they do in their pitch before they've actually written one line of code saying that that's the method, and then they're going to end up dying trying to get that one deal done, and so forth. So we haven't done it yet, but we have signed one, and that's coming. It's very related to one of the ones you named, but not that exact one.
Oh, okay.
There's this fascinating chicken and an egg problem, because when we got started, we wanted to go do stuff like that right away, and we had no accounts. And people were like, well, who are you? And now we have thousands of customers and an enormous amount of assets that have flown through the business. So now we can go to those folks and say, hi, and they're like, okay, sign here. And so like it changed over time. In the early days, you've got to figure out a way to hustle your way to getting on the board, put some points on the board so that you can go do stuff like that. We wanted to early on, and it was just, it was one of our hypotheses. It was like my best guess was like, hey, look, I think we can do some B2B stuff right away. I was a B2B SaaS guy. And man, I got rejected harder and faster than I'd ever been rejected in my life. And we dealt with it, it's fine. And we went to direct-to-consumer path, and the web page was up and the phone was ringing. So that worked. And now we're in a position of strength where we can go do some of those things.
Right. Thank you.
So my question is for whomever wants to answer. When you're growing your team, what are some key things you look for?
Personally, I like
in the potential employee. What are you looking for?
We look to hire people that are hungry but probably haven't yet had their moment. And like we're full believers in delegation and total ownership. And so everybody that joins our team owns something. Like the website or part of the website or this project or that initiative, or they do the support on this one project, one part of the product. And that gives people a chance to shine. And so that's really important. And then you got to have some interest in finance, because this isn't like bank accounts and your first stock, right? We're talking about alternatives, cryptocurrencies inside of a retirement account, financial partners that most people aren't familiar with, and so like you got to kind of be interested in this, and so that's pretty easy to tease out too, though.
Yeah, I mean, what Chris said, I think I think having people that are excited or hungry and you know, whatever their motivations, maybe it's working at a startup and learning everything that there is to know about, you know, a young company or something, but having that sort of curiosity to want to join a team that you're not just going to do one thing. You're going to have to do a lot of things, and you're just excited to work hard about it. Like that excitement, you can sort of tell. It's been my experience that enthusiasm is there. So someone that seems excited and seems curious and wants to learn, but also wants to work hard, is really what I think makes a good fit for a startup. But yeah, it varies, but we're all personal finance geeks at the end of the day, and that's probably the one thing that runs like core through everybody in the company is we all find this stuff pretty interesting, and we like talking about it, and we like learning about it. So I think that's like the one main feature, or not feature, one main attribute that we all have and share.
I don't know if I have much to add to that, but I think that, you know, Chris and I, we like the opportunity, maybe overlooked people, right? Because as a startup, you're probably not going to go after the master's in computer science, spent 10 years as an engineer at Google to come work for your startup at the seed stage. But you want to find someone that's probably just as talented, but never had the same opportunities, you know, didn't get into the right program, right school, and they come up through your organization, and they develop within your organization. I think that's the main thing, because that's what you're looking for, because those people will fit in better. I mean, right? Because sometimes you're going to get this big company person coming in, and they're asking you, you know, where their admin is or something, right? That's not going to work. We've actually turned down candidates that had, you know, over 10 years of experience in engineering management roles, but like, great, this person's a really good engineering manager, going to be a terrible engineer for a company. You know, they haven't built anything in basically the last 9 years of the 11 years they spent at that company. They're probably really good at going from meeting to meeting, but it'd be hard for them to prove to me that they could build something from nothing.
Any last questions?
Anybody else?
Well, thank you guys for your time. Really appreciated the interview. I think this has been really insightful. We're going to post everything on YouTube, so if people weren't here in person or weren't watching the live stream, it'll be on YouTube.
Okay.
And we can maybe get some good nuggets from it, some good clips. I think you guys covered a lot of great topics. Thank you, Damon. Appreciate everybody for coming out as well in person. Just a few housekeeping items. June 8th, we'll be back here with the Floor founding team. They have reinvented the return and resale of big bulk items, and they have a big announcement coming soon that should be out publicly before the event. So that'll be our next event, June 8th, the Wednesday, June 8th. And yeah, let's put our hands